welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect live with our experts and on to the Buy Now, Sell Now lens. We're going to be talking about the defensive play, that is Pharma, what all is happening on that front. But before that, let's have a look at what the markets are up to. So Cheryl, seems like the 20,000 mark is very close to the heart of the index lovers, and Nifty is not ready to give up that number and very near to those levels.
Very good morning to you, Shrishti. If you look at the way how the markets have been panning out, second day of volatile moves coming in for the benchmark indices. If you look at Nifty, it's given up all of its gains, still struggling to break past the positive territory. A lot of resistance actually at those levels that we are witnessing since the word go. It's not just the benchmark indices, and actually take a look at what the broader markets are doing, because if you look at small cap index, that one has given up almost over 2% from the day's highest point, and for the mid cap index it has given over 1% from the day's highest point. So yes, a weak trajectory coming in for the broader markets, but let's not forget the fact that the sharp rally that actually witnessed also over the last few months in excess of 30% is the rally that the broader markets have actually witnessed. So such a correction was warranted, was expected to creep into the broader markets. Let's take a look at some of the railway counters, because they have been flying high of late, and today once again they are seeing some sort of weakness, be it Railtel, be it Rail Vikas Nigam, be it IRFC, Texmaco Rail, as well as Titagarh, all of them down and out in today's trading session. Take a look at what is happening to BHEL, because that particular counter was also down in trade today. JSW Energy also saw some sort of a profit booking for the second consecutive session. You have some of the small cap players, or rather some of the Nifty 500 players that have been falling over the last 15 minutes. Let me outline some of them. One is Jindal Stainless has fallen about 2% in the last 15 minutes. You have JK Paper that continues to be under pressure. Linde India is under pressure. Bharat Dynamics, Godrej Industries, Coforge. These are some of the counters that are actually losing out over the last 15 minutes or so. So yes, broader markets is a point of worry at this point in time, because once again we are seeing some sort of a weakness come in. But yes, you rightly put it, Shrishti, that one particular sector that is actually staying true to its name, and that is defensive, and that is Pharma Index, because that one definitely continues to hold on to gains in an otherwise volatile market session. No doubt some of them have lost steam in the last 15 minutes, but still holding on to positive gains, isn't it?
Well, yes, and look at the index that is still holding a gains of around 0.4%. And what's been happening in this particular space, despite the fact that the US prices are seen to be inching up, India business is supportive, but key to note is that there are so many reports related to big M&As in the sector. All throughout the past month, we have been tracking about what's happening with Cipla and Torrent and the rest of the players involved. That's still in the play. But now what we are getting to understand that America's Biogen Pharma is looking to sell its biosimilar business. So let's go across to my colleague Sharad Dubey for more on this. So Sharad, how big is this development could be, why it is important to track, and any Indian players that could be looking at this opportunity?
Well, yes, you're right. This Biogen entire industry, actually, they're looking at cost-cutting measures. Now they're actually evaluating various options, trying to sell their biosimilar business. Now, of course, you're looking at it, market is actually believing that they might actually sell it to Samsung Biosims. Also, do remember they're having a long-term agreement going ahead with these both companies. But the brokerages, especially Macquarie, is believing that there is an Indian player also, and the name is Dr. Reddy's. That is where something over there a deal can happen. And of course Dr. Reddy's has aggressive plans already set up to actually increase its biosimilar business. Now this is for the developed markets of US as well as the European region. Now looking at the cash balance itself, that is also standing at almost roughly, you could say, $608 million, and Dr. Reddy's could be the best suitor among the Indian players as well. Now what will happen is it will add a kind of a missing commercialization piece which would be coming in for the biosimilar business, and this would actually boost the pipeline as well as the top line numbers going ahead, and the brokerages are bullish on Dr. Reddy's actually getting the deal. Now they have Dr. Reddy's recently collaborated with Merck, but a strategy change at Merck did not let this early strides to materialize, and this is why the impact is there that Dr. Reddy's would need a new chain on biosimilars when it comes to the product portfolio. Now Dr. Reddy's also mentioned that they don't have a strong front-end sales infrastructure as per the brokerages, and the Biogen's biosimilar business could actually provide this missing commercialization. So this would actually augur well for the company.
Right, so that is what is at play when it comes to Biogen, and why Dr. Reddy's is also in focus. You have Macquarie's note that's come out on why Dr. Reddy's is in focus, Sharad. But also we have Mitsas, the researcher who tracks actually pharma sector, and there is a lot of reason why Ajanta Pharma is soaring in trade, isn't it, Shrishti? But that sort of a data applies to the rest of the pharma players, isn't it?
Well, yes, absolutely. Cheryl, Indian pharma market, that's how Indian pharma has grown in the month of August. That data is out. And for the third consecutive month, we have seen moderate kind of a growth coming in, being in mid-single digit, which is for the month of August has come in at 5.8% on a YOY basis. But looking at the July data for July 2023, then Indian pharma market grew by 6.3%. So not much to read into this particular number, but key to note is that the growth was mainly driven by the price hikes. In this, if we do some bifurcation, then three particular segments have performed well, wherein cardiac, gastro, as well as gynae have done well and grown in the range of 7 to 9%, and the respiratory and anti-infectives have seen a decline of 4 and 3% respectively. That could have impacted the overall pharma sector as well. But let's focus to the companies now, and like you pointed, Ajanta Pharma, that's soaring in trade, 8.5% uptick coming in for Ajanta Pharma, and that's because we have seen Indian pharma growing by 5.8%, but Ajanta Pharma in the same time has grown by 11.6%, and that's because their ophthalmic therapy, which contributes around 29% of their overall sales, has seen a jump of 27%. That's the key trigger. Pain therapy, which constitutes around 8% of the sales, has seen a jump of 17% on a YY basis, and even derma, 20% of their sales, has seen a jump of 13%. So all these three segments have done and shown double-digit growth for itself, and the second player that has done well is Intas. Other than that, if we talk about the companies who didn't do that well, were Glaxo as well as P&G Health. They have seen a decline of 4.5% to 5% for the month of August. So that was a roundup of the IPM data for the month of August, but definitely Ajanta Pharma is the key winner.
Absolutely, Ajanta Pharma is a key winner in the otherwise weak market. Look at the stock, 8% uptick coming in for Ajanta Pharma. But let's put the spotlight on the pharma index as a whole. Which are the top bets that you need to watch out for? What are the concerns that you need to watch out for? Let's bring on board our experts for today. We have Hemen Kapadia joining us, as well as Ashish Maheshwari. A very good morning to you, Hemen, as well as Ashish. Thank you so much for joining us on ET Now. And Ashish, let me come first to you, and let's talk about the pharma sector as a whole. You know, after the COVID rally, everyone kind of forgot about the sector last year altogether. But this year looks like pharma is coming back with all the gusto. A pure defensive play over the last two trading sessions, when you saw actually rest of the market under pressure. Pharma definitely was standing true to its name that it's a defensive sector. Where do you see pharma headed from here on? Which are the stocks that in the pharma space that you need to watch out for? And what are the headwinds that you need to keep in mind while investing?
Yes, I agree with you. Right now, pharma is a burrow where everybody like to hide, given the kind of volatility is there in the mid cap and small caps. And even if you see last 3 month performance, this is not something that pharma has underperformed. It has also given almost 20% return, Nifty Pharma Index. And from 15,750, it is still available at 15,400. So confidence is there in this particular pack. And if we go in the deep, like what are the rationales why this sector will continue to do well? There are various things. First, US market is again picking up, and their drug shortage is almost at 5-year high. So whatever the pressure related to margin or inventory were there, they are over now. And we have seen in the last quarter also the margins of companies which are primarily supplying to US market from 100 to even 500 basis points, margin improvement was there. So overall in this year, I'm expecting at least 250 to 400 basis point margin improvement in almost all the pharma companies. This is one major reason. Second is one drug, which is cancer-related drug, Revlimid. This is going generic now, and it is giving almost $1 billion opportunity to pharma companies. And our companies like Cipla, Dr. Reddy, Zydus, Sun, they are having another $500 million opportunity on account of that drug. And another thing which is keeping this sector in limelight, a lot of M&As and fundraising plan like Cipla, they are looking for sale. Glenmark, they are planning to raise money. In Biocon, they are also looking for equity infusion because they would like to retire some of the debt. So many things are there in this sector, more company specific though. But in my view, this is a sector which will be in limelight now, at least for this quarter, because those aggressive valuation sector like railways or defense or power will take slight breather, and pharma will continue to do well in my view.
Okay, so this particular sector is expected to continue to do well in this quarter as well, and you can have a look at that. That's the Ashish take coming in on the pharma sector. But Hemin, coming to you, how do you see the pharma index, and specifically what's your outlook on Dr. Reddy's as well as Ajanta Pharma, which are in focus on the back of the news flow? And apart from them, any other counter that you wish to highlight for our viewers that is looking attractive to you?
A very good afternoon to you, Srishti. Thank you for having me. I think if I just briefly have a look at the Nifty Pharma Index, firstly, one of the stronger indices because it posted a fresh all-time high last month. And this was after a almost 1.5 2 year correction. So it took time, it took price to retrace, and now we sort of, we've started a journey with a fresh all-time high and has resumed its longer-term uptrend after a 1.5 2 year hiatus, which is good, made it healthy. So currently the setup is positive. We are above important moving averages. The mechanical indicators on the daily chart as far as the Nifty Pharma Index are just about giving a crossover buy. So frankly speaking, we seem set to do well. Selectively though, I think many stocks are all over the place. I have a feeling Sun Pharma looks interesting. We've had a 4-5 week correction. We're on the verge of overcoming a recent swing high, and the daily picture has improved significantly. And on the longer term though, we remain safely ensconced in uptrend. We have been for the last 3.5 years and counting. So Sun Pharma is something which looks positively interesting.
Pharma looks positive. Actually, what's interesting to note also of the fact, Shishti, if you look at the amount of companies that have seen price volume breakout, most of them are only pharma stocks, be Ajanta, Oro, JSK Pharma as well as Glenmark. So yes, pharma definitely in favor. But on that note, viewers, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your queries. Don't go anywhere.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. Viewers, you can connect with us live on a WhatsApp number that will be flashing on the top of your screen, and we will try to help you better with our experts. And today we have Hemin Kapadia as well as Ashish Maheshwari with us to guide you on your stock queries. So let's get started. And the first query that I have, Ashish is coming in on Merck Electronics. This query is from V. Ravichandran, and he has bought 2,500 shares at a price of 20 rupees. I'm not sure whether you tracked this one or not, but he wants to know the prospects of this company and can he go ahead and further invest in this particular stock?
See, this is again a stock which is a typical small cap kind of a stock, 500 crore market cap. In last 1 year, we see stock is in quite a narrow range only. So in my view, instead of Merck Electronics, which is a loss-making company, better look at frontline stocks in this particular sector. And I'll suggest on some correction, you can look at more Dixion Technology, which is a better bet. At the same time, PG Electroplast is a stock where they have raised recently money by QIP also at around 1,700 odd levels. American Electronics, I'm not that bullish because fundamentally, I'm not finding anything positive happening in the company.
This one is coming for you, Heyman. This one is written to us from Balan, and he has Elecon Engineering as well as Kalyani Steel, and he's making 15% profit in this holding. He wants to know whether he should continue to hold on to these or look to switch out of this and instead look at NHPC as well as Devyani International.
Very good afternoon, Cheryl. Elecon has gone through the roof. It has gone from 20 on the downside to 980 on the upside, Cheryl. We walked into a short-term correction, which I believe might convert into a medium-term correction. It's been a humongous price move, so I would suggest some amount of profit taking won't hurt. I believe you can take that call. Kalyani Steel is a slightly different kettle of fish, though. We've recently posted a fresh all-time high, but the setup seems positive. Yeah, short term, I believe we worked on a corrective phase like the rest of the market, and being a mid-cap stock, and the fact that we have moved from 280 to 530 in the last 3-4 months is sort of a reality check. So that's going to take some time to consolidate, but the longer term setup seems to be positive. So Kalyani one can hold, Elicon one can book some profits, and if you can just please tell me the other stocks you wanted to buy.
We wanted to buy was NHPC and Devyani International.
Okay, NHPC 15 to 56 looks good, has moved one way. I would suggest buy on declines. The setup seems positive from a longer term point of view. Devyani International 202 was important resistance level. We've sustained above it. Slightly limited data, but the longer term data seems to suggest that we are safely ensconced in the longer term uptrend. So yes, I think on a decline. Once again, 135 to 225, I would say levels are 205, 195 and 185. So I think he can spread his purchases, but yeah, the setup on Devyani looks good. But if the mid caps are going to slip further this month, once again, split it.
The next question is also for you because Anant Krishnan wants a short-term view on ABB. He has bought 75 shares at a price of 4,608 rupees. So how are the charts looking like for ABB India?
Well, frankly speaking, I don't think his decision was wrong because 46 was a resistance level above which ABB closed on Monday for the first time in listed history. And now we've slipped back and gone the other way. Uh, and we took some time to do this. We spent around 8 weeks in a range between 4150 and 4600. So I would suggest keep a stop loss at 4150 because if it does come back and close above 4600, we are going to go very close to 5000 in a jiffy. But currently, this whole build-up has unraveled, and we are back to square one. By that I mean back in the trading range. So keep a stop loss for safety. If it closes above 4600, it won't stop this time around.
All right. The next one that I want is, next query that I have, is coming in from, I've kind of missed the query from the viewer. Okay, let me take this one instead then. This one is coming from Anju, writing to us from Dubai. She's bought 7,000 shares of HCC at 29 rupees per share. Should she look to average on current levels? What's the advice? Ashish, I'll actually take this one to you because HCC also a counter. Do you think that it's advisable to stay put with this? No, she's making 22% loss in this one now.
So again, I think investors bought this stock at almost 52-week high of 30 odd, which I remember. But as such, I'm not finding anything wrong with the company because again, a turnaround case and at 3,500 odd crore, I think market cap, the valuation looks attractive because whatever the worst was there related to their real estate project is now over. And now again, company is on the growth path. So in my view, at 22 rupees, you can safely average on HCC. My next 1 year target here is again 30 plus.
On HCC. We're moving on, and Ashish, the next query is from K. Parthasarthi. He's a senior citizen and invested in Natco Pharma. He's holding 50 shares at a price of 850 rupees. Now, if you see, this counter was seen to be drifting lower. But what to do? He's a long-term investor. Should he continue to hold on or rather make a switch to any other pharma counter?
It's a good pharma stock in my view, and you can continue to remain invested. We have seen very significant improvement in their bottom line in last June quarter compared to the March quarter also. So again, this is again a company which is focused more towards the US market. So they will continue to do well. Remain invested in my view.
No way, actually, Hemen, this one is from Arvind. And he's making losses in Manappuram Finance, 470 shares at a price of 150 rupees. And the next one being IDFC First Bank, 550 shares at a price of 91.75 rupees per share. What should he do with this counter? With the IDFC, it's marginal loss that he's making. But for Manappuram, for his amount, it's sizable.
Unfortunately, Cheryl, he managed to buy Manappuram at its short-term peak at around 156. Since then, we've closed into the 55-day exponential moving average, have posted a lower top, lower bottom, and most of the daily mechanical indicators have given a crossover sell. Now, that was the bad news. Good news is rock solid support at 134. We've posted an intraday low of 134.15 today. Rock solid support. If this somehow breaks, the next important support comes in at 126. So as of now, hold. The momentum has taken a hit. We walked into a corrective phase, which I believe is not going to get over in a day or two. It, I believe, could take a week or two. So hold on, keep these levels in mind for safety's sake. Keep a stop loss of 122. I believe once this correction is over, Manappuram would come back, stage a recovery, and if it closes above 140 post this correction, I think he should be in the money. And IDFC First, very clear long-term positives on the chart. Near-term, yes, I think we walked in a corrective phase after a stupendous move. I mean, the stock moved from 29 to 101. That is brilliant. The long-term charts still seem absolutely sanguine, not an issue. Near-term, though, if he's worried or has a slightly shorter-term view, it's a sell-on bounce. But if it's a longer-term view, it's a buy on decline.
The next query is from Ayush, and he wants your take specifically on a couple of counters. Firstly is Garden Reach Shipbuilders looking at a fall yesterday as well as today. Is this a good time to buy fresh in Garden Reach Shipbuilders? And he also wants your advice on JSW Energy as well as Tata Power. Is this a good time to enter these names as well?
Okay, we'll start with Garden Reach shipbuilders. We've had a move, brilliant one at that, 220 to 980. Give it a breather. The short-term momentum has taken a hit. There's a puncture in the up move. So support comes in at 740, 640. So I suggest wait a bit. The brilliant move. The last move itself has gone from 400 to 980. So give it some little bit of a time and a price retracement. So near term, I think it's not going to recover in a hurry. The longer term picture still remains positive. Tata Power is something. If I have a 2-year point of view, the stock is going to go to 350, if not 400. So unequivocally bullish on Tata Power, but 7 months in a row the stock has moved up.
Okay.
So I would be surprised if we take a near-term hit or so.
Okay, Hemin, thank you so much for giving your views. But Ashish, quickly, if you can take your views as well on Garden Reach Shipbuilders as well as Tata Power, good time to enter these names.
See, we have seen almost 180 rupees fall from 52-week high in Garden Reach Shipbuilders. Only problem is slightly in this sector, whatever the euphoria was there, slightly is cooling off. Nothing wrong fundamentally with the companies in defense sector, but as stock moved up at quite brisk pace, so some profit taking is bound to happen, which is happening. So fundamentally, if you ask me, 1-year time frame, again, this stock can touch 900 plus. As far as Tata Power is concerned, again, 260 rupees will be a safe level to buy. After a long consolidation phase, this stock has started moving up, and 260 will be again a good price point to enter in Tata Power.
View coming in on Tata Power, but on that note, we slip into a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of our stock-related queries. Then this next one is coming in from Jitendra. He's writing to us from Pune, and he's a long-term investor. Ashish, he wants to know whether he can look to invest in Aarti Industries over the long term, that's 3 to 5 years. He's saying that he is not currently invested in the counter, but he is indeed invested in other chemical names like Pidilite, Clean Science, as well as Tata Chemicals. So one, he wants to know a buy price for this, if you can suggest that whether he should look at this one right now, and also it makes sense to expand the chemical portfolio.
First of all, Aarti Industries, I'm not big fan of this company, if you ask me, because they're into typically the bulk drug kind of manufacturing. And we have seen a stock also underperforming from 900 rupees. Stock is near 52-week low only. So nothing great is happening. Even we saw June quarter numbers are pretty bad for Aarti Industries in this quarter. So Aarti is a avoid in my view. Instead of this, yes, Tata Chemical can be a good bet if you are looking to invest in this particular sector. Along with, I'll suggest that you can look at Anupam Rasayan or Lakshmi Organics as a better play in this sector.
Ashish, the next query is also for you because Panduranga Rao is holding 3 counters in which he is having a good amount of profits. Firstly is he is holding Dawat, 1,000 shares and having a profit of 175%, GMDC at a profit of 320%, as well as Marico near about having a profit of 70%. So on all of these 3 names, he wants to know, can he make some selling out of these or continue to hold on?
So first was Dawat or Dabur? I couldn't get.
Dawat, the one associated with rice.
Right. Okay. So I think you are making enough money in these particular stocks, but at the same time must congratulate that you have picked all these stock at pretty low levels. But all your 3 picks are good. So in spite of having so much profit, I am not advising you to sell any of these. Again, first we'll start with LT Food, which is again doing well in the way rice prices are going up. And this time we are expecting slightly lower sowing of paddy. So rice will be doing good. GMDC, no-brainer, those stock has touched recently 52-week high, but in my view, it has still potential to even go up by another 100 odd rupees GMDC from this level. And Marico is again slow and steady, but they will win the race. So in my view, stay invested in all 3.
Right, the next one is coming in for Sushil Kumar writing to us from Trichy. This one is for you, Hemain. One, he's bought JP Associates, managed to venture into this one at a price of about 9 rupees per share. He's saying that should I book profits or hold on to it? What's your advice on JP Associates? Makes sense to stay put with this one right now. We did speak about IDFC First Bank, but he wants to know whether he should look to enter right now or at lower levels.
Okay, shall we start with JP Associates? That's a brave thing to do. Looking at how the price movement has been for the past quite a few years, it's been a woeful, abysmal underperformer. Peaked at 340 in March 2008, quarter ended. Okay, having said that, on pure technicals, I have good news. The stock is looking good. After multiple quarters, we seem to have taken a turnaround. There's a rounding bottom in place. The level to watch out for is 15.50. It's a prolonged period of consolidation. It's ticking all the right boxes on technical parameters. Once again, this is not a fundamental view, it's a technical view. I'm slightly reticent because the past history has been not very conducive, but this looks good. Above 15.5, this stock can give you 50% returns. I think it looks quite solid on the charts. As far as, okay, extreme near term, there's a cool off, and the cool off could take a few days to sort of play out, but the setup seems to have turned for the better. As far as IDFC First Bank is concerned, I would say once again, split your purchases. Don't go the whole hog at one go. First level is 89. That's where we have support coming in. We're almost there. The next support level comes in at around 84.50, and the next support level comes in at around 75.50. So these are the 3 levels where he can split his purchases. I'm not sure if it hits all 3, but the first couple seem possible. Cheryl.
Okay, moving on. And Ashish, I'm getting a lot of queries for you today. And the next one is also from Krish. And he says that all of your advices are taken very seriously by him. And now he wants your advice on VBL, that is Varun Beverages. He's been holding 255 shares from a price of 770 rupees. Seems like a stable counter. But going ahead, do you believe that more return potential is there for Varun Beverages? He wants a long-term view on this one.
So have you seen such a stocks which has given this kind of return in FMCG pack? And if you've seen last 3 years, this is the best performer FMCG stock. And besides this, just see the numbers. March to June also, profit from 400 odd crore to 1,000 crore in Varun Beverages. So there's no wonder the stock is almost a 1 lakh crore market cap company now. And this is my favorite FMCG stock also. So in my view, remain invested. You will see 4-digit mark in Varun Beverage by end of this year.
All right. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll try and take some more query of yours. So don't go anywhere. Sitaram, who's writing to us from Chennai, and this one is for you, Ashish. He wants to know whether for the long term, there's a period of 5 years, should he actually look to go ahead and look at HCL Tech or TCS? He's already holding Infosys and Wipro. For the long term, do you think these two counters make sense now?
Yes, it makes sense now if you're looking at a 5-year time frame, because both these companies are strong companies, sustainable business model, and sooner or later, US market will also rebound. So it's a matter of time that gradually you should start accumulating. Though I'll suggest you go for 50-50. Half you'll buy TCS and half you buy HCL Tech, because both are having their own strength, and like it's a good portfolio where you're having HCL Tech, TCS, Infosys, and Wipro. And in 5 years, at least expect 15% CAGR in all these 4 stocks.
Okay, Hemin, the next query is on Max Healthcare, and all these hospital stocks have shown phenomenal run-up, and Pradeep from Kolkata has bought Max Healthcare shares from a price of 443 rupees. At profits right now, good time to book profits, or he can continue to hold on?
Essentially, if it's a medium-term view, there's not two ways about it, book profits. If it's a longer-term point of view, I mean, let's say at least a year or more, it's a hold. Anything lesser than that, I'd say book a bit of a profit. We've faced resistance from its swing high. We're just about slipping into a correction. Bigger picture remains good.
Right. This one is coming in from Zenith Koster, writing to us from Ranchi, Jharkhand. And this one is for you, Ashish, because I believe you'll be able to explain this better. She wants to know whether she should shift from Tata Motors to Tata Motors DVR. Do you think that switch makes sense, given the fact that the way the company's announcement also way back during their earnings, what they're planning to do with DVRs?
No, I don't think so. This will be a prudent move, because ultimately DVR will be extinguished and will be Tata Motors shares only. So why you want to go other way around? In fact, investors are selling DVR and coming to Tata Motors. So my suggestion will be remain there in Tata Motors only.
Invested in Tata Motors. But Hemen, the next query is from Ajay, and he's looking for some counters which could potentially give him some short-term gains. The stocks that he has in mind is Ashoka Buildcoin, DB Realty, as well as Gati. So out of these three, any of the stock that you like on charts at this point in time?
I think out of the three, two look good, Srishti. I think Ashoka Buildcoin and Gati both look good. But fortunately, unfortunately, both of them have slipped into a corrective phase. So if I can request him to extend his time horizon a bit, just a little bit. Sorry, Gati has also exhausted his correction, is back on track. Ashok Buildcoin is still corrective. So I say you can buy Gati from if you have a 4 to 6 week point of view. If you have a slightly longer term point of view, both Ashok Buildcoin and Gati look very good on charts. There's a longer term turnaround, indicators positive. Both look good.
All right. Today right now we have a query coming in from Thomas George. He's writing to us from Kochi. CG Power, is it a good buy at current price for the long term? This one is for you, Ashish. Sorry.
Okay. So CG Power, again, good performer stock, and the kind of run-up we have seen in CG Power in the last couple of years is huge. And these power companies will be again in demand only, because be it power equipment manufacturer to power transmission or power financer, because this is a sector which will continue to do well for coming years. And CG Power has given very good return already, but it will continue to do well. So remain invested is my view.
Power name, Ashish, Mr. Singh from Pune wants a fundamental view on GE Power. Can he go ahead and invest in this counter with a 1-year investment horizon?
So G Power, actually, I'm not that big fan of this particular company. Instead of this, if you ask me, I'll still go for other power producer like SJVN is a very good bet at this price point because the kind of good performance we saw in June quarter and the kind of new developments happening in this company, SJVN can give you better return than G Power.
Okay, Hemain, the next query is from Rebecca, and she is holding 10 stocks of DVs at an average price of 4,200 rupees. Can she average more at this particular price or stay put?
I'd say
lap.
stay put. Yeah, so I'd say stay put. If you want to average it between 35.50 or 36.50. Currently, it's a midway of nowhere.
Alright, this was from Nagesh from Bangalore, only for the month of September, looking to buy Adani ports as well as Tatacom. What's your take, Ashish? Makes sense?
Yeah, makes sense in both. If you're looking for 1 month time frame also, I'm expecting both will come out with very good numbers for this quarter. So be there.
Okay, Hemain, Ramamurthy is having 30% profit on L&T. Good time to book partial profits or continue to hold on?
I'd say continue to hold on. Partial profit, yes, but
All right. Ashish, Arun Jindal wants to know Biocon for 3 years. Can he buy now?
Biocon?
Yes, Biocon.
You can buy for 3 years for sure. It's a good buy.
Okay, Hemain, B. Soumya has bought restaurant brand Asia at a price of 112 rupees, and what a phenomenal move we are seeing in today's trading session. So, any short-term target and holding period for the same?
okay, hold for 4 to 6 weeks. Target is 140.
All right, and with that, we come to the end of the rapid fire as well as query segment. Thank you so much, Ashish, as well as Hemain, for joining us on the show and talking about pharma sector. What should investors do, as well as resolving queries. And with that, viewers, we are totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets at noon coming up next.